everyone to today's Catalyit Live webinar, The Homeowners Insurance Crisis. We're excited to have you here. I'm Catalyit's Lauren Crosby, and I'll be your host for today's session. Today, we're joined by BriteCo's National Agent Sales Lead, Ben Gillespie, for a timely discussion on the nationwide rise in homeowners insurance premiums and what it means for agents, brokers, and their clients. Before we get started, just a few quick notes. Well, please enter your questions into the Q&A section at any time. We'll pause at key moments to address those questions and also be sure to save additional time at the end. You're also welcome to use chat. We'll be monitoring that as well, and you can use that for comments or technical issues too. I'll be monitoring that for you. And finally, today's session is being recorded and the replay will be available within 24 hours inside Catalyit's on-demand video vault at catalyit.com. So soon you'll be able to rewatch this session or share it with your team. With that, Ben, I'm going to turn things over to you and stop my screen share. Ben, please take it away.
Thank you. Share my screen. There we go. Well, thank you, Lauren, for the introduction. I am Ben Gillespie. I am the National Sales Agent Lead for BriteCo. I'm going to take you through a presentation about the homeowners insurance crisis. In the table of contents and the agenda, we're going to do the introduction, BriteCo survey background, what agents say about homeowners premiums and non-renewals, jewelry coverage and agent advice, agent attitudes towards the standalone jewelry insurance, challenges to selling standalone jewelry insurance, agent strategies to deal with the HO crisis, and the conclusion, of course. So the homeowners crisis now is an epidemic. I mean, headlines across the industry tells us that, Gen Zs are dropping homeowners insurance in 2025. You got half of the homeowners fear losing insurance as a cost of rise, surveys shows, and living somewhere insurable in the new American dream. And so these are some of the issues that we're seeing across America at this point in time. And here are some statistics that's even more alarming. Homeowners insurance costs up to 70% since 2021. Wow. And the HO insurance is now 10% of the mortgage. And now I feel a little differently about it because I remember when it was about 5% and now it's 10%. And if I was a betting person, it's going to continue to go up just because of costs. Over the past year, more than 3 in 4 agents have seen the increase in the number of customers attempting to reevaluate their current policies or requesting to requote their policies through other carriers. I mean, that's some of you can identify with that because I'm sure that you deal with that every day from that standpoint. I mean, to give you one, increasing homeowners coverage, it's up 61%. Reducing the coverage to save money, 68%. I mean, attempting to reevaluate their current homeowners policy to reduce premium. And that's always been that way, but it's even more alarming because of what's going on out there. And the American dream is becoming very painful. In the homeowners rates wildly distorted, climate change and driving higher rates, but not always in areas with the greatest risk. And if you're looking at the map here, of course, you're seeing things in California, you're seeing things in the middle of the country, and that's just because everyone likes doing business in the middle of the country. And that's where you're seeing a lot of the increase because we're taking up for some of the things that's going California, for an example, in Florida, for example, or anything that's coastal from that standpoint. Because the reason why is because in the middle of the country, it's not that bad to do insurance or doing business with insurance. It's pretty plain from that standpoint, and you can predict it as well too. And so you're looking at for something from average from $1,000 all the way up to $4,000 a year. And that's just nothing for a fancy house. I mean, this is just regular homes. And I can only imagine what the fancy homes are costing from this standpoint. Homeowner premiums and non-renewals are going up, up, and up. I mean, if you look at the scale right here, you have 1 in 200, 1 in 100, 1 in 50, 1 in 25. And you're just seeing, were you seeing a lot of red? California, Florida, North Carolina. I feel bad for people in Oklahoma, and I think I know why, because of education they've given me in the past, because of tornadoes and things like that. But you're seeing this growing and growing, and they're also in places where where you didn't see anything. I mean, you got Wyoming for an example. You have Eastern Washington as an example. You have parts of Missouri, Iowa, Louisiana. I mean, this is something that is going to get worse over time. BriteCo Annual Agent Survey Overview. We've conducted this for the second year on PNC agents across the country to gauge what they're experiencing. And so it was conducted in November and December of 2025, about 427 agents, all 50 states, with focus on Florida, Texas, and California. And we're focusing on homeowners, insurance trends, and jewelry strategies as well. Homeowner premiums continue to rise. 2 out of 3 agents have more than 75% of their clients see a premium increase. I can tell you a time as an agent was one for 21 years. That wasn't always the case, but now it's going to surpass what I was when I was an agent. What percentage of your clients have seen an HO premium increase in the past 12 months? And I'm sure that some of you on the call now, or the webinar, I should say, is that you see these numbers are not shocking to some of you, and some of them, depending on what part of the country you're in, are worse. And so it's something that we have to deal with from that standpoint as agents and figure out different ways to help our clients and, more importantly, retain our clients. 3 out of 4 agents had less than 25 of their clients experience a non-renewal. So what percentage of your clients have seen an HO non-renewal in the past 12 months? And that's something that I take to heart because we see this a lot. A lot of agents that I deal with on a day-to-day basis, I see this a lot, in some of the things that they're being non-renewed for are standard things like trim the tree, that type of thing. But you're seeing things as far as you made a claim and it was a jewelry claim and you have a large schedule non-renewed. And some of the things that we're seeing is that from that large schedule, it's harder to remarket that simply because it's a large schedule. And as a general rule, carriers don't know how to deal with it from that standpoint. Reasons for the homeowner increased non-renewals. 75% cited increasing cost of construction repairs. That's true. Wood is going up. 70% increased frequency of climate-related disasters. Yes, in those areas you're seeing a lot of things that are being hit and pummeled from that standpoint. 44% said clients' homes were located in high-risk areas such as flood, hurricane, tornado, hail. That's true. I feel sorry for some of the people there in Nebraska and Iowa because floods is a big thing in those areas as an example. 35% said too many client claims within a specific time period. That has never changed. That's been that way ever since I can remember. You can't make too many claims, even though that is for the definition of insurance, but you feel like these days you have to be timely and when you're making claims. And so I can only make one claim every 5 years. That's what it feels like. And even then you're being canceled from that also. What agents recommend to control HO costs? 87% advise their clients to increase their homeowner policy deductibles. That's also true. But in some cases, what I've seen is that increasing deductibles doesn't save you that much money. 67% recommend bundling P&C policies. That's also true. And I've also seen it where agents are having to unbundle and keep auto in one place and homeowners in another. 51% advise replacing homeowner rider/floater with a standalone jewelry policy. That's also true. 45% recommend installing smart home safety/safety systems. Yes. And 14% advise reducing homeowner policy coverage. I've seen that. I don't recommend it just because of if you have a fire or something like that, it can really hurt you and be very costly from that standpoint. But I do understand from that standpoint because I know that some people are also self-insuring. Benefits of standalone policies. Premium savings over HR rider/floater. That is a true statement. As a general rule, carriers they do it simply because out of courtesy. It's something that they're not an expert in compared to a standalone jewelry policies. Broader coverage, especially for mysterious disappearance, that is also true. Standalone jewelry also has more coverage, typically for less money than what you're paying on your homeowner's insurance. Avoid premium impact, no third-party claim reporting. That is a big, huge deal. And I want to say it again, that is a big, huge deal simply because Having a claim these days can really hurt you. It'll raise your rates, and then you're going to feel as though that you want to cancel your policy because you're feeling that it's not affordable from that standpoint. And so that's a big deal. Designed for valuable items, when you have a standalone policy, you have higher coverage. You have higher limits so that you can have some of your other jewelry that you're keeping somewhere else, you can put in one policy and get a pretty good variable premium for it. And note, at least one standalone jewelry provider does not report to claims or Clue or A plus. That's me, BriteCo, and we'll talk about that later. But do clients know how a jewelry claim could affect their homeowner policy? 54% says that age clients are not aware. That's also that is I don't they're getting better at it, I will say, but there are a lot of clients out there. They say, well, what's the purpose of insurance in case I have a claim? That's true. However, when you file a claim, as we all know, is that you're taking a chance of increased premium or being dropped, and then that's a frustrating experience. And the last one is the education opportunity exists for agents to close the gap. That's also true. As educated as clients are these days, because the internet and newspapers, all those things that are available, we still need to take the time to educate them because I'm a believer that if I take the time to educate you, I might not sell you today, but you'll come back because I took the time to educate you. And that's what we do. Yes, we sell policies, but we're also educators in the realm of insurance. And taking the time just to talk to them about it, it can help you in the future. Agents agree on the need for client education. Near unanimous agreement, 95%. Agents survey say agents must educate clients on jewelry claim impact. And a best practice is to include a separate jewelry option in all client discussions. That is a true statement. It goes like to anything else. You get 100% if you ask for. And so if you're asking for the conversation to have this with your clients, they're gonna listen to, and that's an opportunity for you to have an additional line somewhere else. Save them some money, but as we all know, the more lines of insurance that you have with an agent slash carrier, the less likely they are to leave. Agent sale challenges. Agents identify barriers to selling standalone jewelry insurance policies, but these barriers are falling with new jewelry insurance options. So 30%, 33% says limited provider options. True, but we have some solutions for that. Client conversation difficulty. I will say this one, even though this is a true statement, you just have to ask. That's all you have to do to have that conversation. It doesn't matter how you do it, just do it. And asking to have a conversation or take an extra 5 minutes to bring this up can bring you dividends because it will also bring you referrals, which one of the things that we live for as agents. 24% low client interest. That's also true, but that also goes to the education of it. And so you can send an email when you do client reviews, bring things up like that so you can continue to educate them because the more that you bring this up, sooner or later they will either inquire or buy from you from that standpoint. And 20% cumbersome quoting. I can tell you stories about that because when I was an agent, we used paper a lot. And now there are easier, more simplified ways of getting that done. And you can use things there online that makes it quick and easy to get things accomplished so that it doesn't take you that long to quote it. Agent strategies to help clients. Bundling bundling slash unbundling policies for a discount, that's also true. That's also a good idea. Bundling does bring you a discount, but also too, the discount that you get, you might be better off unbundling it at times. Recommending a standalone jewelry insurance policy? Yes. Yes and yes. And tailor strategies to local client risk. And so in different areas of the country, besides offering a standalone jewelry policy, you might offer flood. From that standpoint, there are plenty of them out there so that you can help mitigate some of the things from the home, so then you can also help with premiums, but also for the money get protection that your clients need. So in conclusion, homeowner premiums and non-renewals will continue as carriers try to manage higher risk and costs. Clients lack awareness. That is something that we can definitely all that we can improve on. And consulting versus homeowner rider and versus a standalone jewelry policy. Agents support standalone policy as one of the best options. Yes, yes, and yes, because you like the option of not reporting to Clue or to A plus. Education and simplified quoting are the keys to protecting their clients from homeowner coverage increases in risk. Yes. It's almost as if you have to pull a policy apart just to rebuild it back so that you're making sure they're properly protected, but also alleviate some of the holes that are there so then you can move things to a standalone policy, particularly jewelry insurance or flood or the various others that are out there. And so you can get the 2025 agent research report. This will be ready next week, so you'll be able to get this re-report. Some of the things that I briefly went over, you'll be able to have it available for you. And I highly recommend having it. It's a great read. And some of the people that put this together, they spent a lot of time doing hard work for this. And then the last part, what I said we'll get to, is why BriteCo. Standalone among the jewelry insurance policies. For one, we're easy and fast to quote. Everything is online. You can quote, you can bind, and you can endorse on the online portal. And it's very easy and simple. And you can also quote and bind faster than you can go to McDonald's. And that means that's less than 2 minutes, just as an FYI. On average, we save about 20 to 40% off of the jeweler policy. So then I get this a lot. Well, if I save this money, where can I put it? Well, now that you save some of that money that you get, now you can either put it towards other policies or other things that they should be buying, like more life insurance or an umbrella policy, as an example. And the big one that I love is saying every day, we don't report to Clue or to A plus. That is a huge deal because I wish we can do that with everything that we have in all things insurance, but we can't. But at least this can give you some kind of hope. And so that you can still remarket the homeowners policies that you have to different carriers when you need to. Easy appointment process. This is what you're dealing with. I do this every single day. I make it easy, simple, and fast. And I can't tell you how easy it is. And I have people tell me all the time, this is easy, this is awesome. And so I highly recommend that you look at it and you have a conversation with me from that standpoint. We're backed by an AM Best A plus rater, and it's on admitted paper in all 50 states. That is awesome because someone's going to ask you if it's admitted paper, and we can say yes. And the coverage limits. No one piece can be above 300,000 with a max schedule of 750,000. That covers a lot. So any questions that you may have, I am all day for them. Just bring them on and I'll have answers.
Well, thank you, Ben. I do have some questions for you. This is
Awesome.
more of a practical integration question, maybe for our producers out there. But when an agent is reviewing a homeowner's renewal that's increasing significantly, what's the most natural way to introduce standalone jewelry coverage into that conversation? Do you have any
One of the things,
recommendations? Oh, go ahead.
yeah, sure. No, thank you. One of the things to look at is because every year things happen and you get a newborn, you got married, you got divorced, you got promotions, and so it's always a good way to review the homeowners and see what things are changing because you may not have a fur when you first started, but now you have a fur, so we need to know that. When I talk about jewelry and it's like, well, you have 2,500 in jewelry, but maybe they bought another diamond ring, so you want to do an account review. Anytime that you do an account review, it gets everyone on the same page and also point out some things like jewelry and things like that. I used to call it a financial checkup because you go to the doctor for a checkup, do an insurance checkup or financial checkup as well too to make sure that you're properly insured and see where you can save money or save money in one way and have it applied to another and you're covered and maybe even put a couple dollars in your pocket.
I love that. Thank you. Here's another question, more of a client psychology question. Are you seeing changes in how consumers think about insuring high value items as homeowners' premiums rise? More price sensitive, more selective, more proactive?
It's a little bit of all of it, to be honest. You have some of them that are price sensitive, and some of them, they'll say, well, I know I have it in the vault, but that doesn't do anything as far as insurance is concerned. And some of them we get a lot where they say, well, tell me more, they ask a lot of questions, and it's like, well, why wouldn't I do it? And it's like, yes, why wouldn't you do it? And I think that it goes back to education. And one of the things I always stress every day, don't be afraid to have that conversation with your client. They come to you, you are the expert. It's like going to an attorney, it's like going to a doctor. They come to you for advice. Give them the advice. I know sometimes they don't like what you have to say because you have to give them news because they may have to spend more money. But I rather spend a few more dollars than thousands of dollars because something wasn't properly covered.
And because BriteCo offers jewelry insurance as one of the offerings, so for agencies that have never offered standalone jewelry insurance coverage before, what does the onboarding process look like operationally? Is it simple enough to incorporate without adding additional service burden?
Yes. One of the things that we do when I get you appointed, and it's very, and I hear this every day, you're fast. Yes. I want you to make as much money as you can. I want you to make money that I can't make. And so I want that for you. The other part of it that we also go, we take you through a demo. And I think that to show how easy and fast that we are, so then you can do this yourself. I'm always here as a support, but I also want you to be an individual so you don't need me because you're experts. And so once I show you, and it's really easy from that standpoint, and when you see it, it's like it can't be that easy. Yes, it's that easy. There's no hidden ball trick. You're not an episode of Punk'd. Ashton Kutcher is not somewhere behind me. It's not like that. And so you can, when you look at it, you can say, wow, do you do other policies? I'm trying to get my CEO to do it. I'm trying to have him conquer the world, but we only do joy for right now.
Great, thank you. Well, let me pull up the slide we have here. So if anyone has any other questions, they can get in touch with you, Ben. And I wanted to just share a few reminders as we close out. And Ben, is there anything else that you'd like to share with the agencies that are with us today?
Well, I'm always available. You can reach me with my contact information is right there. Be happy to have a conversation, set up a time, demo, whatever the case may be. And one last thing that I failed to mention that we offer when you get appointed is we offer wedding and event insurance as well too. And that's something that's on the same platform. And so when you have that demo I will take you through that as well too, because when you get appointed for jewelry, you get access to that too. And so that's something for you a little tease for you to come and talk to me, and I can take you through that as well.
Fantastic. Well, thank you again, Ben, and thank you, Catalyit Premium Partner BriteCo. And of course, thank you to everyone who joined us. We know how busy agency teams are, and we truly appreciate you spending part of your day with Catalyit and BriteCo. As a reminder, today's recording will be available within 24 hours inside Catalyt's on-demand video vault at catalyit.com, so you can rewatch it later or share it with your team. And before you leave, please take a moment to complete our short 3-question survey that will pop up at the end of this call. Your feedback helps us shape future Catalyit live sessions, and you can also indicate if you'd like to be connected directly with Ben at BriteCo. If you'd like more information or want to follow up after today's session, you can also reach out to Ben at ben.gillespie@briteco.co. And of course, if there's anything we can do at Catalyit to support you or your agency, please don't hesitate to reach out to us at hello@catalyit.com. Thanks again for joining us, and we hope to see you at another Catalyit live session very soon.